BlackRock is the largest asset manager in the world and the largest foreign asset manager in Switzerland. Mirjam Staub-Bisang has been at the helm of BlackRock Switzerland since 2018. In this finance.swiss interview, we speak about the rise of ETFs and sustainable finance. Around 2/3 of your assets under management are passively invested. Do you see passive funds gaining market share compared to active funds, and why?
It's a great question, Tanya. Thank you very much for that. And actually, we don't speak of passive, we speak of ETF and index investments here at BlackRock. And when we look back, 40 years ago, the first index fund was created, 30 years ago, the first ETF was created, and institutional investors were among the first to adopt those. But then the industry really gained speed over the last decade or two. When I look at ETFs, we were at a volume of below 2 trillion 10 years ago, and end of last year we were at 10 trillion. When you ask me why, I would say there's 3 reasons. First, ETFs are an easy way to invest. It's an easy way to gain broad or specific market exposure. It's a low-cost way to gain that exposure, and it's a way to actually create resilient and robust portfolios across asset classes, because today you find ETF and index investments across asset classes: equities, bonds, real estate, commodities, etc. And perhaps as a last reason, and this is where we see a lot of institutional investors come in, they use ETFs to also manage risk in portfolios, to gain exposure quickly, but to also hedge portfolio risk.
Then BlackRock offers a wide range of ESG-related funds, but we've seen a backlash recently because of greenwashing. What's your take on this reaction?
I think greenwashing is a very important topic and very much on the minds of the asset and wealth management industry, because it really boils down to trust in the financial industry, trust in a wealth manager, trust in asset managers, and hence it has utmost importance. And we as BlackRock, and here I'm sure I speak for other players in the industry as well, we welcome any regulatory initiative to fight greenwashing. So most recently also the SFDR regulation that we've seen in Europe, which asks for transparency of investment funds that call themselves sustainable and expects the necessary transparency, but also reporting for investors.
And it was a tough year for sustainable funds because of underperformance of ESG funds compared with funds without any exclusion, so-called sin stocks. Can you talk about that?
It's a very interesting and important question, and here it probably is worthwhile to take a step back on BlackRock's position related to ESG and climate risk. 2-3 years ago, we came out with our investment belief that climate risk and sustainability risks are investment risks. And as a fiduciary manager of our client assets, we try to manage climate risks and sustainability risks as good as we can. And now, over the past couple of years, we've seen sustainable assets actually outperform traditional assets. Yet this year, this was very difficult because of the surge in energy prices. So any portfolio that was underweight or excluded energy assets would take a hit on performance. So we saw that. But for us, this climate risk, but also the transition to a low carbon economy by 2050 is a long journey, and it's not a straight and smooth journey. It will be a bumpy journey, and so what we see in the short term with the energy crisis and energy prices and the impact it has on portfolios, we see that as a short-term detraction of a long-term journey.
And there's also a lot of discussion around the rating providers working with different qualitative and quantitative metrics and scores. What's your take on that?
Here it's probably worthwhile to differentiate between ESG data that's being reported by companies and what ratings agencies actually make of this data. So what we see in ESG data that's being reported, we see a convergence of standards, something we welcome very much. So investors or ratings agencies actually now don't have different rating but how they interpret it can very much differ. And that's a good thing as well. It's very similar to, say, an investment bank rating a stock as a buy versus another bank which might rate it as a hold.
Now, you mentioned you welcome the regulators to step in. Switzerland recently issued the voluntary Swiss climate scores to have a common standard for climate transparency. Now, one of the indicators is the stewardship of asset managers. There they look at questions like how do asset managers utilize their power in their engagement with companies, or if they have goals to reduce emissions in the portfolio. What's the global policy at BlackRock?
Tanya, I think that's a very important question for an asset manager like BlackRock, with 2/3 of our assets being index assets. And for these, we cannot actually divest of certain companies. So for our engagement related to climate risk, we look at the universe of approximately 1,000 companies, which cumulatively account for approximately 90% of carbon emissions across our client portfolios. And with those, we hold a very close dialogue about what their climate risks are. So we ask for transparency, but also what the company does, what the company management has in mind to actually mitigate those risks and lower those risks, and what their climate strategies are. So here we're very, very closely engaging with companies. Perhaps worthwhile mentioning is also the impact of a company on natural capital, so on biodiversity. And here we try to seek transparency as much as we can, although that's really the next frontier. It's very hard to gather that data yet, but it's definitely something we focus on as well.
And let's talk about Switzerland. BlackRock is an American company. It was founded 34 years ago and has been operating in Switzerland for over 25 years with offices in Zurich and Geneva. So how does Switzerland differ from other major financial centers?
Switzerland has been rated as one of the best business locations for years. And I would say due to a number of factors, education, we have great academic institutions, the political stability, very important, favorable labor markets, also very important. I would say the financial sector, of course, as well, plays an important part in that, to also be recognized as one of the most innovative business centers, financial centers in the world. And perhaps lastly, great place to live, excellent work-life balance for many people. So yeah, I think that makes Switzerland a fantastic place to have a business.
And from your perspective, what needs to be done in the near future so that Switzerland remains the biggest offshore financial center?
I think here sustainability is key again. So I think on the one hand that we ensure that we have very reliable standards also for investment products created and distributed in Switzerland. And here the Swiss Asset Management Association is coming forward with a self-regulation approach, which we support very much. So I think that's good on the one hand. And then secondly, I think it's important that the different stakeholders actually come together. And here I speak of the financial industry, but also the real economy, politicians, politics, the government, and of course representatives of the academia, that they come together and work on a narrative for a sustainable Switzerland.
And with finance.swiss, we're actually also trying to create a platform where all these stakeholders come together. Thank you very much, Mirjam, for taking your time.
Thank you, Tanya.